Traders on the internet make this a big issue, and if they ever listen to anyone talk about moving the stop loss to break even, they make it sound like it is the end of the world. But is this really something to be really worried about, or is moving the stop loss to break even a bad thing to do in trading? Now, what if I could teach you some unique methods of moving the stop loss to break even that could drastically reduce your chance of incurring a loss, and it wouldn't even hurt your trade? So, sounds good? Hello and welcome to Forex Monopoly. My name is Daksh, and in this video, I will tell you everything you need to know about moving the stop loss to break even. I will also give you a to-do list and a not to-do list, so make sure you watch this video all the way to the end. Now, before I get onto this, I just want to touch up upon what stop loss is and what break even means. So, stop loss is a way to manage risk. That is, whenever a trader gets into a trade, they place a buy order or a sell order and a stop loss order. And stop loss order basically helps us to protect ourselves in case the price does not go in our favor or in our desired direction, and we can get out of the trade or the situation with a very minor loss. So, what is break even? Now, break even is a situation of no profit and no loss. So, when a trader gets into a trade at a particular level and they square off or close the trade at that particular price or the same price as the entry level, then the trade is said to be a break even one. So now that you know what stop loss and break even means, let us understand what does stop loss to break even mean. So it simply means that once you enter a position or once you enter a trade at a particular price level and have your stop loss some pips away from it, you shift the stop loss to the entry point when the price moves ahead in your favor. For instance, let us say, or let us suppose that you see a good buy opportunity on GBP USD at, let's say, this point. Then you place the stop loss 50 pips below, that is at this level, and then you enter the trade and eventually the price moves in your favor, that is to the upside, and then you see this as a positive sign and you shift your stop loss to your entry level, which will be over here. So by doing this, you ensure two things. The first is that you do not lose anything in the trade even if the price comes back to your level, and the second thing is that it also lets you ride the trend and increase your profit potential. So now that you know what moving the stop loss to break even is and how does it even help you, let us now understand how you should move your stop loss to break even and when you should avoid it. So you cannot always set the stop loss to break even, and if you do, you might not be able to profit from the trade and miss out on a good opportunity or on a good trade. So here are some situations in which you can move your stop loss to break even, and that too successfully. So the first situation is when T1 is hit. Now I always say this, whenever you get into a trade and if the trade is in your favor or if the trade is in profit, no matter what, you always have to get something out of it, and therefore try to have a multiple profit targets when you trade. What I mean to say is there should be some small ones and then there should be some big ones depending upon the situation and what your trade has for you. So your T1 means first profit target. So let us take an example to understand this. So let us say this was the level, that is the support level where you took a buy trade, and then when the price was moving up, you saw that there are various minor resistance at different points. So, and your profit potential, that is your main target, was over here. So what you decided is you will close a little bit of profit when the price reaches to this minor level, and therefore this is your take profit one. So what you can do is when the price reaches the first target, you can close a little bit of your trade, that is you can take a small profit, and then you can set the stop loss to break even. So by doing this, you are also able to get something out of the trade and you are now risk free and you can ride the trend successfully. Now the second situation is value area breach. Now value areas are the areas like this where the price had some sudden movements in the past and the traders believe that something like this could happen again in the future. Now there will always be value areas on the price charts, and if you take a long trade on a breakout of one value area to the upside, then there will be another value area above it, somewhere above it. So this could be the second scenario where you can look to take the risk of moving the stop loss to the break even. Now again, once the price breaches a value area that could have made the price move against you, what you can do is you now know that the trade was a good one because it did move in your favor, and you could move the stop loss to break even. For example, let us say you entered a trade over here and then the price moved in your favor, but there was a value area above and you didn't know if the area will hold or it will break, because you cannot be certain if it is going to hold or break. So in this case, what you have to do is take some of your profit over here, and then if the area is breached by the price, only then move the stop loss to break even. Now the third one is impulse correction impulse. Now we know that the price does not move in one direction in a straight line. It moves in phases, and these phases are called as impulse and correction. So whenever there is an impulsive move, it will always be followed by a correction. And after the correction, the price could either have the impulse in the direction of the first impulse or in the opposite direction of the first impulse. So suppose you took a short trade on USD CAD on a breakout and the price moved impulsively down. It then corrected a little, which was followed by a strong move, that is strong impulsive move in the downward direction. You can move stop loss to break even in such situations as you have confirmation that the trade is going exactly how you wanted it to go. Now this technique might be a little confusing and tricky, but when you will practice it, it will be worth it. Okay, so now that you know when to move the stop loss to break even, let us see when you should avoid moving the stop loss to break even. The first scenario is when the price is too close to the entry level. Now, I have seen traders moving the stop loss to break even just when the price moves a little bit in their favor, and they just want to rush in so that they can make their trade completely risk free. Now, this is the worst thing you could probably do, as you are not giving the price the room to breathe, and you need to give time to the price to move in your favor. And if it doesn't, then you should just take the stop loss, or you should let the price hit the stop loss and move on. Like, what if you moved your stop loss to break even too early and then the price hit your stop loss and then went in your desired direction? Trust me, it hurts. You should never move the stop loss to break even if the price is too close to your entry level. There will always be a little risk in trading, and no matter how good you are at technical analysis, you always have to accept and cherish the risk and try to keep it to minimum, but don't try to avoid it. So the second situation when you should not move the stop loss to break even is when the price hasn't done anything significant yet. The thing is, you cannot just enter a trade, wait for it to simply move in your preferred direction, and then you just move the stop loss to break even. Doing this might get you away a few times, but eventually it will bite you really big. What you should be doing is wait for the price to do something significant, and you have to act only after you listen to what the market is doing. Now, you could wait for the price to breach a value area that was in the path, or you could wait for it to correct a little, then resume the prevailing trend. And then these may seem like a small things, but it goes a long way. Not many traders do this, but that's why not many traders are successful.